Where did the 30-year fixed mortgage come from? And who invented it? Most people think the 30-year fixed mortgage has always existed. It hasn't. In fact, it's actually a modern invention. And without it, most Americans would never own a home. So where did it come from and why was it created? Let's break it down. Before the 1930s, buying a home looked very different. There were no 30-year fixed mortgage loans, no predictable payments, no long-term stability. Most home loans were 5 to 7 years, interest only, with a huge balloon payment due at the end. Down payments were often 40 to 50%. When the loan term ended, borrowers had to refinance or lose the home. The system worked until it didn't. Then came the Great Depression. Banks failed, credit froze, home values collapsed. Millions of Americans couldn't refinance their balloon loans. Foreclosures exploded. By 1933, nearly half of the U.S. mortgages were in default. Homeownership wasn't just difficult, it was collapsing. The government had a choice: let the housing market completely fail or create a new system. As a result, this was the birth of the 30-year fixed mortgage, and we entered into the Franklin D. Roosevelt New Deal. In 1934, the federal government created the Federal Housing Administration, FHA. The FHA didn't invent home loans, but it standardized and insured something revolutionary: long-term mortgages, fully amortized payments, and fixed interest rates, terms up to 20 and then 30 years. This changed everything. Instead of risky balloon payments, homeowners could pay principal and interest every month, know their payment, build equity slower over time. That's the birth of the modern mortgage. So why 30 years? It wasn't magic. It was math. 30 years lowered monthly payments enough to be affordable, still allowed lenders to earn interest, balanced risk between borrower and bank. Shorter terms were too expensive. Longer terms created too much uncertainty. 30-year mortgages became the sweet spot. After World War II, housing demand exploded. In 1938, the government created Fannie Mae to buy mortgages from banks. Later came Freddie Mac. This created a secondary mortgage market, allowing banks to lend more money, lower rates, and expand home ownership. By the 1950s and 60s, the 30-year fixed mortgage became the American standard. Homeownership surged, the middle class grew, wealth was built, one payment at a time. Today, people complain about the 30-year mortgage. But here's the truth. Without it, most families couldn't buy. Payments would be far higher. Home ownership would be limited to the wealthy. The 30-year mortgage isn't perfect, but it's one of the most powerful wealth-building tools ever created for the average American. So no, the 30-year mortgage wasn't invented by banks to trap people. It was created to save housing, stabilize the economy, and give regular Americans a chance to own a home. I'm Money Mike, keeping you informed. If you found this helpful, share it, because understanding where housing came from helps us understand where it's going. Be sure to leave a comment below and tell me what you think.